Welcome to Bruce Hurwitz Presents Meet the Experts. I'm your host, Bruce Hurwitz of Hurwitz Strategic Staffing. You can find us on the web at hsstaffing.com. I hope you'll consider us for all your staffing, career counseling, and speech writing needs. I am delighted to be joined today by Charles Reed, who will be discussing payroll for small business owners. Meet the Experts is sponsored by P&K CPAs. P&K is a full-service accounting firm. They provide accounting and consulting services to businesses ranging from startups to small and mid-cap companies to nonprofits as well as high net worth individuals. Contact them today for a free consultation at pk-cpas.com or call them at 973-882-8810. They will be happy to be of service. Charles, welcome to the program.
Bruce, it's a pleasure to be here. Thank you for having me.
It is my pleasure. Please take a moment or two and introduce yourself to our viewers.
Well, I'm a Midwestern boy. I grew up in Iowa. After high school, I joined the United States Marine Corps, spent 4 years, 2 years overseas, a combat stint in Vietnam, came back, was stationed in Kansas City, met my wife, married her. She had 5 kids when I married her. I claim insanity, but it worked. We were married for 45 years before she passed. I found that business did not value my military experience and knowledge then, and not much better today, I'm afraid. So I went to college, got my degrees, my BBA, my MBA, sat for and passed my CPA exam while still in graduate school, went to work for Texas Instruments. For the next 15 years, worked for small and large corporations, did turnarounds, and then realized I was never going to get to the top of a major corporation. I didn't have the political skills. I was unwilling to stab them in the back and toss them off the ladder. So if I was going to run a business like my father had, I was going to have to start my own, like my father did. So 30 years ago, my wife and I started our own business. It was a mobile accounting service with a payroll sideline. We sold off the accounting about 10 years ago, and now it's just a payroll company. We provide payroll services and related services to small and medium-sized businesses around the country.
Now, our topic is payroll for small business owners. Before we begin, just to make sure everybody's on the same page, how do you define a small business?
Well, and that's a good question because the definitions vary. SBA, it's 250 or less. For us, really, our target market is the under 50 market, which is 95% of US businesses. Over 50, the complexities increase, and we handle them. We have several clients that run in the hundreds of employees, but we go after the small business. Normally, they're owned by an individual who still runs it, and they run from 5 to 50. Our average client size is probably about 17 employees, but that includes a couple of multi-hundred ones that bring it up.
I understand. Now, what makes payroll for small businesses a topic unto itself? Why is it unique?
Well, payroll is unique in that people don't understand it. The massive amount of regulations and rules are huge. 70% of all US federal revenue flows through payroll, either as income tax withholding or as taxes. And so anytime Congress wants to change the revenue stream, which they seem to want to do constantly, most of the time it flows through payroll. The last year has been a classic example of changes. The PPP came in and it got changed 40 times in 40 business days. The employee tax, where they could defer the taxes, the economic recovery, the CARES Act, on and on and on. It all changes through payroll. The 941 form, quarterly reporting, has changed multiple times in the last 18 months. It's very complex. And business people have a business to run. They are experts at their business, okay? And payroll is something they have to do. But understanding payroll completely is a full-time job. I know. I learn new things about it every day. And I've been in the business for more than 30 years. Before I started this company, when I was a corporate management, I always outsourced payroll. It wasn't worth doing in-house. It wasn't worth the complexity, the problems. Fiscal 19, the IRS issued $13 billion of employment tax penalties. On average, it's $800, and 40% of small businesses get hit every year. So if you're a small business and didn't get penalized at 19 or 20, you're due this year.
Thank you. That makes me feel good. So that begs the question, it's funny when you said about outsourcing payroll. When I was teaching entrepreneurship, I told my students, if they start a business, the two things that they should outsource are payroll and postage. That the laws and regulations regarding mail are enough to drive you crazy, and just let an expert do it. It's not worth the aggravation. But anyways.
Absolutely.
I'm looking at your application, and you said you would provide us with the top 5 tips to avoid employment tax penalties.
Sure.
So what are they?
Well, and these are all in my newest book, the Payroll Book, a guide for small business and startups, published by Wiley late last year. But the first thing is accuracy. Most of the errors the IRS finds are arithmetic or putting the wrong number in the wrong spot. So pay attention to the numbers. If you don't like to do numbers, let us do it. The next thing is timing. Make sure all your deposits are made on time. 1 second late, there's a penalty. 1 second will cost you a substantial penalty. Of course, if you stick it in your desk drawer and don't make that deposit for a month, the penalty gets substantial. Know when to file them. Know what to file. File your returns on time and make sure they're absolutely accurate. So arithmetic, filing your deposits on time, making sure your deposits are right, filing your forms on time, and making sure they're right. Those are the top 5 ways, and they're simple, to avoid penalties. Now, the IRS makes lots of mistakes. It issues penalties, even when you've done everything right. So you're not going to avoid all the penalties that way, I promise you.
I only once got the envelope from the IRS. And when it came, my heart started beating a mile a minute. And the form said you cannot submit a copy of your taxes. You must submit an original, meaning whatever the number is, the 1040,
941, 1040, whatever, yeah.
And I looked and I said, okay, I know I sent them the original, but this looks like it could be a copy. I can see where they're coming from. And I got a blue pen and I signed my name in blue ink, resubmitted, and there were no problems.
Right.
Most of the time, would you say that that's the type of issue that the IRS contacts taxpayers about? Something small, simple?
In most of the cases,
honest
it's
people making an honest mistake.
Well, first of all, if you've made a mistake, you can correct it by filing the return, making the deposit, correcting the amount, correcting the form, whatever. These are simple fixes, and they may penalize you, but the IRS technically cannot penalize you for a simple mistake. They can only penalize you for gross negligence. Of course, the problem is the IRS determines what's gross negligence and what's a simple mistake. So you have to argue with them to get them to abate that penalty. And you should never just accept a penalty on the face of it. You should always say, even if you made the error, it's a simple mistake. Make that statement and pursue it. And in many cases, you'll get the penalty abated. The big things, I mean, you read about in the paper and these huge fines and everything else, they don't happen very often. You're right. Most of it is the deposit's wrong, the deposit's the wrong amount, the form's wrong, they lost it. When they do these things manually, sometimes, I had a client do this. He sent 2 returns in the same envelope. They stapled them together and only gave him credit for the first one. The other one's in the file someplace, but they don't know it.
They don't know it. How can a new business assure itself that it's going to be tax compliant?
Again, this is where outsourcing comes in. You don't go to court without an attorney. You shouldn't deal with the IRS without a CPA. If you don't know the rules, you got to learn them. You're an expert in your business. That's why you're in business. It's what you like to do. It's what you're good at. I don't make my own clothes. I don't build my own car. I don't build my own house. I don't mow my own lawn. I outsource all these things because I want it done right. If I were to sew a suit, I don't even know what it would look like. So if you want to be compliant, you either have to become an expert in these things or you have to hire an expert. And if it's that simple, we're compliance experts. We know the rules. We get 5 newsletters a week from the Internal Revenue Service. We read the trades. We study the case law. We study the things coming out of tax court. We study the things coming out of district court. We're on top of these things because we know that it's going to come up for our clients. Things change constantly in this business, constantly. The last 13 years has been incredible. First with President Obama, and then with President Trump, and now with President Biden. Things are changing constantly. It's hard enough for us to keep up with it. I would not expect a small businessman to be able to keep up with the changes in payroll. We send an email every week to our clients, updating them on things that change that they may be interested in, because it changes constantly.
You mentioned case law. My first real run-in with the IRS was when I was a fundraiser, which would have been in the early 1990s here. And that was when the genius who bought a box of Girl Scout cookies declared them as a tax deduction, resulting in what became known as substantiation. And they issued a letter saying that you have to deduct the fair market value of whatever goods and services you've received from the deduction. So the Girl Scout cookies cost $5. The cookies were worth $3. You could claim $2. Now, we never were able to find out who that person was, because if we, the collective philanthropic community of America, ever found out, we'd kill him, because that cost millions of dollars in time with accountants and figuring out how we were going to do this and what the verbiage should be and what in God's green earth is fair market value. But the IRS was great with it. There was no problem. Fair market value, if you could show how you, for example, when I had a gala, I put together the budget, came to X, I divided it by the 400 people I hoped would show up, and that was the fair market value. Simple, no problems. The IRS gets a bad rap, but they're usually fair, I would think. But, and you can comment on that, let me just finish. The issue that I wanted to focus on was the letter. If you ask the IRS a question, you could be opening up a Pandora's box. Not just for you, but for every other business in your category.
Absolutely. I'm a U.S. tax court practitioner,
Mhm.
which allows me to represent clients in U.S. tax court, even though I'm not an attorney. There's a couple of hundred of us in the country. When you file a U.S. tax court case, 95% of them are settled pre-court for numerous reasons, but one of which is the IRS in many cases doesn't want a legal precedent. If you have an iffy case and you go to court and you win, then the IRS, it gets real technical, but the IRS then has a precedent which every other person can rely on to file their taxes in that way. And if the IRS really doesn't want that changed, they won't take it to court. They may just say at the end, we're just going to give it to you. But that's not a legal precedent. That's just an administrative procedure. So they're not bound to that with the next guy who files the return the same way and says, well, hey, Charles did this. Well, there's no legal precedent, so we're not going to allow it. Then he has to go to court and take the expense and the time, and they may or may not fight it. So that's one of the problems in dealing with the IRS and the letters and precedent and the law. But the other big one is the IRS doesn't write the law. Your congressman, my senators, they write the law. The IRS only enforces it. Now, of course, they interpret it a certain amount and they write regulations, but their job, and I was on the IRS Advisory Council for the last 3 years, and we dealt with a lot of things with the IRS, but the one thing that they wouldn't allow us to comment on was congressional authority. When Congress had written a law and said, you will do this, the IRS had no authority to change it, and they just had to live with it. They might object to it to congressional committees. They might say this is wrong, or this is inappropriate, or this is not good administration, but they have to live with it. Now, the IRS is made up of 100,000 people, many of which are eligible to retire in the next 2 years, 40%. And most of them are very, very good people. Fathers, mothers, sons, daughters, brothers, sisters, husbands, wives. They're good people for the vast majority of them. But they're government employees, and they work for a government institution that all the rules are written by Congress, all the major rules, and they're just interpreting things. So Chuck Reddick's the new commissioner. He's an outsider, a tax lawyer from San Diego. Nice guy. But you've got this huge behemoth that's been rolling for 100 years now, and changing it is tough. And when Congress sets the rules, it's even tougher.
Now, sometimes the IRS gives up. I'm going back to my days as a fundraiser. I asked our accountant the following question. What do we tell people about frequent flyer, credit card rewards? So you give a $100 donation, you get 5% from your credit card company towards a whatever. So you've received goods and services worth $5. Can you claim $100 as your tax deduction, or is it only $95? And his reaction was the IRS looked into it, couldn't figure out how to do it, and they just let it drop.
Well, there's that, and there's the de minimis rule. If it's a minimum amount, they're not going to go after it because it's not worth their time and trouble. You're driving your vehicle on company time, and you drive into the grocery store to pick up a quart of milk that your wife told you to get. Mm-hmm. And you come back out. Your distance from your route, your business route, say is a mile. Technically, that's personal mileage. It's not deductible. Mm-hmm. But it's de minimis. And the IRS says, fine. We're not going to worry about the little stuff. Okay. We're not going to sweat the small things, which is good. It helps keep record keeping down.
Well, that's true when it comes to stopping to pick up the gallon of milk. But with the frequent flyer miles, that's something that is calculated. It appears in writing. You know how much credit you're getting. And it's not one person, it's maybe 100 million or 200 million.
Yeah,
So-
but you paid for those. You paid for those miles when you bought the ticket. They came with the ticket. So you've already paid in full for them. So that's just part of the ticket. The ticket's tax deductible or not taxable, however it works out. Why would the miles be any different? That's where the IRS went with that particular one. I remember that well because my boss at the time, when they came out, insisted that since he paid for the ticket, he got the miles. Mm-hmm. and American Airlines said, no, you didn't fly on the plane. You don't get the miles.
It goes to the, well, that's another thing.
It goes to the flyer.
You know, if it's the employee who gets the miles or the company that gets the miles.
Yeah.
You also promised to give us 7 steps to force the IRS to abate a penalty.
Sure.
So,
okay. First thing you do is you get your notice of a penalty. You get your letter and you read it and you go, now, if it's something you did and you can fix it, fix it. But always write a letter asking for an abatement of the penalty. Now, the first letter is going to be essentially ignored. You're going to get a no. I guarantee it. The first letter you write, they're going to say no. But they're going to give you the next level of appeals. So you go to the next level of appeals and you say, please abate this penalty. They say no most of the time, say 95%. But you get the next level to go to. So you file the next letter, which is normally for an appeals hearing. Okay. At the appeals hearing, you present your case, the same one you presented with your first letter. You need to be consistent. The IRS really, really doesn't like you adding more data later on. They feel that you've just gotten, you're trying to take advantage, you're trying to embroider the story. So have your story pretty much cast in stone with the very first letter. So you go to the appeals hearing and you have a good chance of winning there. I've won a number of them because you're dealing with more experienced people. It's no longer collections because collections is just like commercial collections. They're out to collect the money. They don't care if you owe it or not. So getting it to appeals gets it out of collections. Now, if you haven't been able to get it to appeals and they're getting nasty, you file a CDP. It's for a collections due process hearing. It's a Form 12-153. That stops all collection efforts immediately. It's supposed to. So occasionally they screw up. But you file that and you get a collections due process hearing, which is an appeals hearing, but it's a different form of appeals hearing. Okay? So that stops it. And again, you've got more sophisticated people. You can present evidence and tell your story. And in many cases, you'll get a favorable ruling. We get this all the time as we get collection people that won't listen. And when we get to a appeals hearing or a CDP hearing, there's somebody who will actually listen to you and look at what's going on. And we win a lot of those because there's finally somebody looking at the evidence, not just reacting and saying no. Now, if none of those work, in many cases, you can file with the tax court. You can file the tax court pro se, meaning as yourself, and it's a $60 petition fee. And if you're really broke, they'll waive the petition fee. You can apply for it to be waived. So you file the petition with the court, which stops all collection efforts again. Then the first thing that happens normally is it's returned to docketed appeals, which is the appeals department, which supposedly, again, is independent from the rest of the IRS. And the docketed appeals people, normally you're going to have a lawyer, an IRS lawyer, chief counsel in your area that's going to look at that situation. And these, again, are sophisticated people that know the law. And if you're right, they're just going to go, okay, no problem. And you're done. If not, if they really feel strong about it, they will open a negotiation with you, allowing you to pay less than what they've asked for originally. This happens 95% of the time, as I said. So you've gotten a whole nother bite at the apple with a really good shot, even if it's your problem and it's your fault, to get a negotiated settlement that's less than what they were asking for to start with. Now, if all that fails, even if you fail in tax court, you can then go file in district court. Problem with district court is you're going to need an attorney. And down here, it's about a $5,000 minimum retainer. Up in New York, it's probably, I'm told, $12,000 to $15,000 minimum retainer. So that gets expensive. But those are some of the steps you can do to fight. But never give up. Always keep appealing it. I had one that took 9 years to solve. And it took me calling the deputy chief of appeals because I was going up the ladder and the director of field operations would not return my calls. He worked for the deputy chief of appeals. So I called her, and because I knew her through the IRS Advisory Council, and said, I can't get so-and-so to return my call. She said, I'll have him call you. He called me that afternoon. We had it reassigned to a new appeals area and a new appeals officer who reviewed it. And 3 months later, my client, instead of a $95,000 penalty, had a $300 refund. Sometimes it's a matter of knowing the right people.
Charles, I thank you. I'm going to put on the screen now your contact information. And I'm going to finish with the question I always like to ask. Is there anything that I haven't asked you that you wish I had asked you?
I just have one more thing for your listeners. If they will go to the payrollbook.com and put in the discount code podcast, we will send them a free copy of my newest book, The Payroll Book, a guide for small businesses and startups.
Charles, that's very generous of you. Thank you very much. And I thank you for coming on the show.
Bruce, my pleasure.
I'm Bruce Hurwitz. Thank you for watching. And as always, please stay focused on success.